this video, we share Microsafe's views on challenges for a microfinance institution to foray into MSME financing. Our views are based on learnings gained through engagement with microfinance institutions, expanding financing to MSMEs in Asia and Africa. If we analyze the segments that microfinance caters to, it is evident that it is restricted to micro enterprises, whereas financing small and medium enterprises is a fundamentally different business because of the stark differences in the characteristics of the client segment. Thus, for an MFI, it is not an easy walk to upscale, and the path is filled with numerous challenges. So what could be these challenges? Let us discuss these challenges in purview of key business parameters. To start with, let's talk about operations. First, the product design has to be different. The 50-week weekly repayment microfinance loans do not suit SMEs. Second, delivery system has to change from group lending to individual business financing. Cash flow assessment and hard psychological collaterals take place of the social collaterals. To be competitive, the financial institution has to focus on pricing the product. The process of graduation has to be defined. The incentive of group loan officers supporting client to graduate has to be considered. As the microfinance business is not a front-facing service business, most of the transactions happen at the field. Financing SME means that the FI has to invest in building decent offices where the client can discuss his/her financial needs. Appearance also helps in developing trust of enterprise in the FI. A fact to consider is whether the same officer will be handling both product lines or there will be need of a different set of people managing the same. In terms of marketing, the client must be able to recognize the product benefits, for which the MFIs usually focuses on word-of-mouth publicity. However, in MSME financing, MFIs have to make incremental efforts in terms of branding and communication to establish the brand and highlight product benefits to the market. Financing and funding is an important dimension as well. MSME financing means that the FI should have steady cash flows to cater to market demands of high ticket size loans. Also, as the repayment is monthly mostly, the FI have to fundamentally alter their asset liability management approach. Lastly, MFI staff is trained to serve clients in joint liability products, and thus they are experienced in acquiring and assessing joint liability clients. Thus, any MFI venturing into MSME financing should focus on training and capacity building of its staff to acquire and assess MSME clients. In context of these challenges, it is imperative for the MFIs to have clear strategic vision and plans. There are 5 critical factors that ensure success of upscaling. These factors are intrinsic and compelling reason to upscale. Upscaling should not be just another business move as dictated by the industry trends. Upscaling should be an organic progression for an MFI to graduate to next level of organizational and business growth with a clear focus on MSME segment to cater to and understanding of organizational capacities. For discussion's sake, we can club the next 2 factors, namely commitment to the cause and responsiveness to the client needs. Any MFI with the intent to upscale its financial products and services should be committed to the cause of serving the MSMEs. In many cases, MSMEs and especially micro and small enterprises may not be able to provide collateral or may not possess the complete documents that give financing comforts to the financing institutions. In such a scenario, risk-based pricing derived from credit scoring may prove to be an efficient solution to address the discomfort and make the process efficient. MFIs have to strengthen organizational setup with changes in system, structures, and incremental addition in human resources. Also, a great deal of investment is required in market research, product design, training of the staff, and institutional and external marketing. As the MFIs upscale to MSME financing and deal with high-ticket loans, the risk management function gains greater importance. A strategic decision to separate sales, credit, distribution, and collection is a must to ensure lessened probability of financial frauds. Going cashless is second alternative which has to be looked into. Third is investment in credit scoring model, be it judgmental or statistical, as it is critical to reduce risk of wrong client selection. Apart from these 3 factors, investment in technology to manage data and information adequately is important. So we have discussed the challenges and the critical success factors. Now we can summarize the discussion with the way forward. Let us zero in on 6 recommendations for an MFI with plans to upscale. First is committed leadership and strategic focus. Committed leadership is a basic step to be focused on to bring in any strategic shift or new thought process in the organization. The leadership should have a vision, clear growth path, and committed to ensure that upscaling is a success. This vision has to couple with the strategic plan for 3 to 5 years to initiate, stabilize, and grow the MSME financing portfolio and align the MSME financing business line with existing business plans and revenue streams. It is critical that products or services is demand and market driven. The product and services should be based on the requirements of the prospective clients. The client can be from the existing market or in new geography. Currently, MFIs have focused on low income segments, and with the shift to MSME financing, it can rebrand itself. With rebranding, it can either upscale in existing market based on demands received from IL clients or venture into new geographies with branding focused on MSME financing. It is a bottom line that old traditional individual lending or micro enterprise products will not suit the requirements of MSMEs. The MFI not only has to develop and diversify products and services that caters to the business needs such as working capital finance or term loans, it also has to add up the non-financial services such as business incubation, financial literacy or consulting. As discussed earlier, the institution has to re-engineer its processes including back-end and front-end loan origination, appraisal and distribution, MIS, audit and risk management, and treasuries to match the high-ticket loan disbursement targets with monthly repayment cycles. MSME financing is a business run on thin margins, and considering the number of players including non-organized sources of finance, it is critical to achieve break-even through economies of scale. The MFI also need to upscale its customer service standards as there will be a shift in customer segment, a segment that has more exposure to wider financial markets and service standards. The MFI does not want to stand lower than those service standards. Along with that, it is important for the institution to focus on cost structures and keep the operation costs low to be competitive. So it's well established that upscaling is the way forward for microfinance institutions. The need is of a clear strategic vision and commitment.